Welcome once again to another video with FX Hunt. So for today's video, I'm going to be showing you guys the entries we took this week on US30, right? I'm going to be showing you guys and breaking down the entries we took this week on US30. For those of us who don't know, here at FX Hunt, we break down mainly indices pairs, right? Indices pairs like US30, Nasdaq, and S&P. But for this week, our main focus was US30. So what do we see this week on US30 and the entries we took this week? That's what I'm going to be breaking down for you right now in this video. So I'm going to be using the replay chart so that you guys will go along with me just as the way I was viewing the market before everything occurred, right? So I'm going to mark the beginning of the week. So this red line was exactly how the week started, which was the 14th of October, right? This was how the week started. The Asian section, which is the blue line, we just commenced with the Asian section right now. So this blue line is the Asian section, right? Then the axis line you're going to see next is going to be the London section. So in the Asian section we do nothing, the London section we do nothing. We are getting close to the New York section. It's the New York section that we look for entries or set up to be part of the market. We are in the New York section right now, right? The black line is the New York section. So once it's the New York section, we become active and alert to see what opportunity the market is likely going to present to us for the day. So exactly, this is a sign that we're in the New York section. You see these spikes, this is a sign of what? Volatility in the market. Now, when price got here, I took note of it. Why? Because if you look closely, this is an area of interest. Now, you may ask, why is this an area of interest? This is simple. Now, you could see when price got here, you saw the reaction price made here, right? You saw the reaction. Look at these areas. When price got there, you saw the reaction. And when price got here also, it reacted. So this is a sign that the area that price is approaching is a significant area. So we have to take note of this zone, right? We have to take note of what? This zone. So now let me take that off so that you see as price approaches that area and how we dealt with price or dealt with the movement of the market approaching the area. Okay, exactly. Now you could see as price broke above, all I was waiting was for price to break above this area of interest, right? We were just waiting for price to break above this area of interest. As price broke above the area of interest, we took our entry, right? We took our buy what setup. We took our buy what setup. So this was where we took our entry. Let's put this on point. This was where we took our entry, risking about I think, yes, 50 pips. We are risking about 50 pips, and if I'm not mistaken, this area we were trading was an all-time high area. So we had no let's say a support or a resistance level that we are aiming at, or an area of interest we are aiming at. So we were just basically trading off the volume in the market, right? So when price moved, when we took our entry, this was how it played out. Exactly, powerful. So we were now trailing our stop. When price got to 1:1, as at this point, we moved our stop loss to what? To break even, right? To the exact point we took this entry, we moved our stop what? To break even. Now let's commence with the replay. We moved our stop to break even. Okay, then at this point, okay, I think this was the area we closed the trade. If I'm not mistaken, let's move the stop back to calculate the risk to reward ratio. As at this point, okay, yes, I think it was somewhere around here. We closed our entry somewhere around here, yet with about 1:2. This was where we closed our entry for the day on US30. So we closed this entry for this day, which was on Monday, with 1:2, right? Then that was it. The market continued moving up, but we closed with that 1:2. We closed with the 1:2. I know that there was more potential in the trade, but based on it was the first day of the week, which was on Monday, and sometimes on Monday there's a lot of manipulation going on in the market on Monday. So we are just contented with 1:2, and then we looked forward to trading the next day. So now this was the next day, right? So we closed with 1:2 on Monday. Then on the next day, which was on Tuesday, this is the Asian section. As you can see here, this is the Asian section, approaching the the London section. Now we are in the London section, which is the arches. You can see the arches part of the line, right? Still approaching the New York section. Boom, we entered the New York section. As you can see here, you see we are in the New York section. From here, obviously, from here we are in the what? In the New York section. At this point, we are in the New York section. Now, when we are in the New York section, we are very alert and active in what the market is going to do, right? On Tuesday, immediately after the impulsive move during the New York section, I waited for what? The correction. And boom, this was where I now, as I saw the correction, I stepped down to the 5 minutes time frame. We stepped down to the 5 minutes time frame, because it was during this correction that we were likely going to see a setup. It was the correction that was likely going to give us a setup for the day. Exactly. Now, when the correction was done, now I took note of this zone, just like the way we marked the area of interest we marked on Monday during the New York section. The same way I saw this area of interest during the New York section, right? Price was rejecting off these zones. The market was rejecting off these zones. This is the area of interest, you see. The support level, price was bouncing off these areas. So we took note of them. Price was rejecting off these zones. So we took note of those areas and watched as the market approaches those areas. So let's take this off so that we can see the market clearly as price approaches the area. Boom, immediately the market broke below, we took our entry. Right, we took our entry over here, risking about, I think about 70 pips. There about 70 pips if I'm not mistaken. We took our entry, risking about 70 pips on this entry, on this position I mean. Yes. So then we let the trade run. Right. So this was the first area for our first TP, because this was a first area, the next reaction zone, the next zone that price is likely going to react. So this was our first TP. Boom, and immediately price got to our first TP, we moved our entry to break even. At this point, we were trading risk-free in this position. We are trading risk-free in this position. So immediately price got to our entry, we took immediately price got to our first TP, we took our entry to break even, and then led the position right, led the trade right. And I think we finally ended up closing the position with 1:2, just like the trade of on Monday. We closed the trade with 1:2. So this was the second position we took this week. We took the sell position. So immediately after the break, we took our sell position, risking 70 pips, targeting 1:2. Just like on Monday, we bagged 1:2 on this day. And this was on Friday, approaching the Asian section on Friday, approaching the London section on Friday. Good, boom, the New York section kicked in. This was the New York section. And I think this is a little bit forward, because I'm trying to break down the analysis exactly as it occurred, so that you guys will know what I was observing and what I was seeing in the market before everything played out. Right? Okay, boom. New York section. We're already in the New York section. Now, I marked our area of interest. This was our area of interest. Now, if you want to know why I marked this as an area of interest, you saw price reaction here, right? Same thing happened here. And when price got there during the New York section, you saw price rejected of that zone. So already at the back of my mind, I was already aware that price is really interested in this area. That's why price is bouncing off this area, right? Price is really interested in the area. That's why price is rejecting when price gets to this zone. So we also have to be interested in this area also. So immediately price, now let's continue. Immediately price got there. Now this was where we took our entry. The break of this, we took a sell position, a short position around here. Right? Immediately price broke above it, below it. I mean, immediately the price broke below it. We took our entry, risking about, I think they're about give or take 90 pips, because there was a lot of volatility in the market, a lot of volume in the market. So I think about 80 to 90 pips. Right? We're losing about 90 pips. Then we let the market play. So in this position, I think we were up about, okay, now in this position we were close to 1:1, but the market didn't later got there. The price movement didn't later move to 1:1. So I would have moved our entry to break even, but it was a few pips close to 1:1. But obviously, as you can see, price rejected back and what and took us out. Price rejected back and what and took us out. So this position was a loss. On Friday, the last position we took for the week was a loss. So that was how the week went for us on US30. We took the first position on US30. We made 1:2 here on Monday. On Tuesday we made 1:2. Then on Friday we took an L. We took an L on Friday. So altogether, we had altogether a combined risk to reward ratio of 4, right? 1:4. And then we took 1 L. So 1:4 minus the 1 L we took, which is to a total of 1:3. So if you were, for instance, if you were risking $10 for each position in this trade, you would have made $30. This is minus the stop loss minus the loss you took on Friday. If you're risking $100 per each trade, you would have made $300 last week. If you were risking $1,000, you would have made $3,000. If you're risking $10,000, you would have made $30,000. This is minus what the loss, subtracting this after you subtracted the loss we took on Friday. So it was a nice week. It was not a perfect week, but it was a profitable week. So that's how the week was for us here at FX Hunt. So if you like the video, I want you to, if you enjoyed the video and love the breakdown, I want you to like this video and comment the parts of the trade that you likely anticipated was going to be profitable, and then click the subscribe button, turn on your notification to be updated when we drop our next video. Peace out and stay blessed.